Today's video is going to get me in hot water, I'm pretty sure, because it's a very sensitive subject. And for a family man like me, it's also a very personal one. I'm talking about life insurance. If I look at the statistics, 52% of American adults have a contract, 66% of Australians, and wait for it, a whopping 126% of Japanese have one. So everybody is concerned. Today, we're going to discuss a few important topics. First of all, should you get life insurance? If so, what type should you get? For how long? What kind of coverage? As well as with which company should you get a contract? My name is Yoram from Economia. We have a lot to cover, so welcome back to the channel and let's get started. Let's go directly to the main point. Do you need life insurance if you have a family? Life insurance is basically a way to replace the income of the main breadwinner if that breadwinner were to disappear. So if you have a partner, you have kids, you have elderly parents, or maybe you have siblings that rely on you for their livelihood, then you have dependents. And those dependents, as the name indicates, depend on you. You provide them with emotional support and certainly with financial support. So if you were to disappear, on top of the shock of you disappearing, they would have problem making ends meet. And if this is the case for you, you do have dependents. Therefore, you do need life insurance. Easy to understand. Except if you are already financially independent and you have so much money that you have everything ready in case you were to disappear. In that case, this video might not be for you, but thank you very much for stopping by and taking your time to listen to this very first part. You can stay, but I'm not sure you're going to learn a lot, but don't hesitate to give a like and maybe comment just a little something to say you passed by. Thank you. Now, let's continue to understand which types of life insurance there are and which type, more importantly, you should look at. There are mainly two types of life insurance, term life and whole life, also called universal, also called cash value, but that's basically the two main types. We're going to start with whole life insurance because that's the most common, especially for the elderly folks. That's also the one that people have the most problem understanding. I'm not going to go into all the details and the subtypes. I'm going to give you the overall way of how it works, and after you can look for the small prints yourself. As the name indicates, whole life insurance covers you for as long as you are alive. You are the person who is insured, you're insured for a certain amount, and if you were to disappear, this amount would be paid to the beneficiary. Maybe it's your partner, maybe it's your parents, maybe it's your kids or a sibling. Pretty clear up until now, right? And whether you have been insured for 2 years or you're insured for 50 years, that's okay. You're going to be paid, or at least your beneficiary will be paid, whatever happens. Usually the maximum is 100 years, 121 years. It depends on the contract, but you get the jig of it. But that's not the only part. There's also an aspect called the cash value, on top of being covered as what's called a death benefit, right? The money that's being given to your beneficiary. There's also a part of savings. So part of your premium, the money you're paying every month for this coverage, is going towards the cash value. And this cash value is a bit of a saving account, if you will, where part of this premium goes there and it's going to accrue over time. And you would be able to withdraw this cash value or maybe borrow against it at some point. So there are two aspects of it. Sounds really interesting, isn't it? It sounds like a bit you have coverage and you have investment at the same time, right? Best of both worlds. Actually, the devil is in the details. Let me explain. First, about your premiums. For the first 3 years, the amount of your premium going towards cash value does not accrue. And the reason for that is that all of your fees, all of your commissions are front-loaded, meaning that the first 3 years, all the money is for paying the fees. It's not accruing. So you're losing the first 3 years. The second one is the rate of return is really low, between 1 and 3% according to NerdWallet. So it's not very high, especially if you compare to the stock market where it's on average 8% after inflation. Finally, this cash value, you can withdraw it while you're living, but after you pass away, your beneficiary can get the death benefit, but the cash value goes back to the insurance company. So basically all that money disappears. Listening to that, it doesn't sound so good anymore, does it? Now it's time to discuss about term life. So term life, as the name indicates, is a limited term insurance coverage. Usually it's between 15 to 30 years. And it works in a very, very simple way. From the day you're covered until the expiration of the term, you are covered. If something happens to you, then your death benefit goes to your beneficiary. But if you lapsed from the day your contract finishes, then you're not covered anymore. So if something happens to you, nothing goes to your beneficiary. Very easy to understand. It works the same way as your house insurance or your car insurance. Very, very straightforward. And the main advantages are as follows. First, the premiums. The premiums are really cheaper than whole life because they are just concentrating on the death benefit. Depending on how you look at it, they can be as much as 20 times cheaper on an annual basis. You can see on screen the comparison for men and women in the US depending on the coverage and number of years. This is a big difference, isn't it? The second one, 100% of your premium goes toward your coverage. Nothing goes in the cash value. So it tends to be more efficient for your money. The third one is as your needs grow. For example, you have additional kids, additional dependent, or your income grows as well. You can add new contract or additional coverage to your policy. So it's a bit easier and a bit more customizable than the other one. So which one should you choose? By the tone of my voice and the explanations, you know already where it's going. Term life is the way to go for most people. More flexible and cheaper. And with the savings you are doing with the premiums, you can direct some additional money towards your investment, whether you're doing it in a Roth IRA, an IRA, HSA, or other type of tax advantageous accounts. That being said, there are 3 exceptions that are worth noting where whole life insurance makes more sense. First, you have a lifelong dependent. It can be someone in your family that needs care for their whole life. It can happen. So that whole life insurance would give you a peace of mind because you don't have to think about it. And when you unfortunately disappear, that person would be taken care of. So that's the first exception. The second one, you've already maxed out all your tax favorable accounts, all the investment accounts that we talk about all the time, and you need another place to put some money. That's case you're already very, very comfortable and you don't want to do real estate. So maybe in that case, talking to a professional and seeing if whole life insurance makes sense for you is an option. The third one is if you are really, really successful and already really wealthy and you are subject to estate tax in the US. For being subject to estate tax, you need a nice amount of wealth. I'm just writing it down just here. And in that case, maybe in terms of inheritance and estate tax, you want to be able to provide or to help paying for the taxes. So that could be a way for you to prepare and to put money aside so you help your family pay for those taxes. In that case, I'm sure you have professionals taking care of your affairs and you probably don't need my advice or anybody else's, but I thought I should list it up here. For everybody else, you and me, term life is still the best option. So now that we have established what type of contract makes the most sense for most of us, let's discuss how long should that contract be and how much coverage you should have. What most people say is that you should start with a 20-year contract. Usually you start a family, you are with a partner, maybe you have kids coming, and 20 years would give you a coverage for all the time when they are very small. And as your family evolves, maybe there are more kids coming, maybe your income goes up, or maybe you have more dependents that are not kids, then you can add more policies along the way or increase the coverage of your policy. So how much coverage should you get? I did a bit of research, looked at different people, what they were saying, and the consensus seemed to be 10 to 15 times your annual income. So let's say you're making $50,000 a year. 10 times your income would be $500,000, or 15 times would be $750,000 a year. So that's quite a lot of money, but that would be the money that would go to your beneficiaries. Now, how much money does it represent? Does it last for a long time? Let's just say they get that money, right? And after they would put it on the stock market. I'm going to make it very simple. Let's go in the stock market at 8% a year. Those 50K would bring in $40,000 a year already without touching the capital. So it's pretty good money, right? I'm oversimplifying it, but that gives you an idea of how to think about the amount of coverage that you would need. Our next step is obviously to decide with which company should you buy your life insurance. I'm all for startups and for new companies, but when it's about life insurance, when it's about insurance companies, it's safer, generally speaking, to go with well-established, long-running insurance companies, with a few exceptions, like that one. But that's a rare case. So stick with the well-known names, as you can see on screen, and there are many depending on the countries where you live. I personally think that your first stop should be the insurance company that's already providing for your car insurance, for example, or for your house insurance. You can turn to them and ask them if they have a good deal. They already know you and they might be able to provide you with something interesting. Remember, they probably make more money with a whole life insurance, so make sure that you're asking for term life so the discussion is going to be faster. Of course, it's always good to make competition work a bit, so in order to lower the premium. To do so, you should shop around, and nowadays with the internet, there are a lot of ways to shop around easily. I'm thinking for the US about Policy Genius that would give you a lot of quotes for a lot of different insurance companies. In Japan, you have Kakaku.com, you have Rakuten, you have Hokende, that can give you a lot of different options. In Australia, I've heard about iSelect, and there's Policy Bazaar in India, just to name a few. There are probably many sites I don't know about in your home country, so if you have any recommendation, please leave it as a comment for everybody else in the box below. Thank you very much. And I forgot to say that actually, I have my contract with the company called AIA out of Singapore, and actually that's a company with which I have other types of contracts, so I did exactly what I just told you to do. Is I went back to them, asked about quotes, and I also shopped around, and at the end of the day they were the most advantageous for me, and I also have a very good advisor, so that's why I stuck with them. I hope this video was useful. Just remember a few important points. If you have dependents and you're not financially free, you need life insurance. Full stop. They depend on you to make ends meet. Have a backup plan all the time. And when you take life insurance, start with a term life of 20 years, have a coverage of 10 to 15 times your annual income. And do not hesitate to add some coverage as your need increase and change over time. And make sure to always be covered and don't let your coverage lapse. If you're also interested in knowing what to do with your paycheck and how to use it the best way possible, I have this video ready for you. And there's this one too that could be interesting. If you like this video or learned something, please give it a like. Do not hesitate to subscribe for more content to come. And if you have any comments, please leave it in the box below. Thank you again, and until next time, goodbye.